that if the Fed didn't cut by maybe 50 basis points on its next meeting, that it risked a stock market crash if it even waited till September. And I said that the recession would officially begin then with a stock market crash. Now, of course, we've been in a recession all year, maybe even longer. I believe the government will eventually, after this election in November, they will revise over a year's worth of economic data, and they will then backdate the recession to sometime before 2024 began. Now, when I said that I thought Powell should have moved this week, it wasn't because that's the right thing to do. Of course, it's the wrong thing to do. The Fed's never going to do the right thing. What I was saying was that if Powell's goal was to really help the economy, make it more likely that Harris is elected, right, to continue the current administration, and try to, kick the can down the road, try to prop things up for a little longer. If that's what the goal was, I thought he should have taken advantage of that move to help the markets and to at least, look like they know what they're doing. Of course, they don't know what they're doing, but had Powell taken my advice, which he didn't, that I will get to that, in a bit in the podcast, but he would look extremely smart right now as far as the conventional wisdom is concerned, had he done that in light of the economic data that came out today, which, was a bombshell for the markets, but it didn't have the result that a lot of people would have thought. It wasn't bad news is good news because it means there's going to be a rate cut. It's bad news is bad news because it means the Fed waited too long to cut rates and we're going to get a hard landing.
In a week marked by significant market volatility, the Dow Jones plummeted nearly 600 points in a single day, and the Nasdaq fell over 10% from its record high, pushing it into full-blown correction territory. The S&P 500 didn't fare much better, down 2.2% for the week. Amid this turmoil, gold emerged as a bright spot, climbing 2% and signaling potential safe haven demand. According to Peter Schiff, these dramatic shifts indicate a looming crisis for the US economy. He warns that if the Federal Reserve doesn't act quickly by cutting interest rates by 50 basis points, we could face a stock market crash and officially enter a recession. Schiff suggests that the recession has been ongoing for over a year and that the government might revise economic data after the election to backdate the recession to before 2024. Despite the Fed's inaction, Schiff highlights gold's resilience as a crucial indicator of future economic conditions. He describes this as one of the most unloved gold bull markets in history, where the fundamentals are stronger than ever. This sets the stage for what he believes will be a significant rally in gold prices. As growth stocks falter, the rotation into value stocks continues, reflecting a shift in investor sentiment.
So the lower interest rates aren't going to be a savior. It may provide some cushion for the decline, but if the Fed did wait too late, and it's behind the curve, which is what the people will think, then even though we get lower interest rates, we're going to get lower earnings. And so that's going to really hit hard the growth stocks. And exactly what I said happened this week. The markets, first of all, got clobbered today, one of the biggest sell-offs we've seen in a while. The Dow Jones was almost down 1,000 points at the lows. But it paired a lot of those losses, and it closed down about 600, a little over 600 points. So that 600-point drop represented a 1.2% decline in the Dow on the day. And that was the strongest of the major indexes. Again, the rotation out of growth into value continued in earnest this week, as I forecast it would last week. So the Dow was down 1.5% on the week. So pretty much almost all those declines coming on Friday. And the Dow is now down 4.5% from its all-time record high that it just recently hit. The S&P fared a bit worse because it has some more growth stocks in it. It was down 1.84% on the day and 2.2% on the week. And the S&P is now sitting 5.5% from its high. Not that big a drop. Now, look at the NASDAQ composite. Got crushed, down 2.4% today, down 3.8% on the week. We're now down better than 10% from the record high that it just set. So that's full-blown correction territory for the NASDAQ. The Russell 2000, which had a couple of really good days recently, is almost as bad. It was the weakest index for the day and the week. It was down 3.5% today, 6.8% on the week. So we're now down almost 9% from the record, or not a record high, but the 52-week high for the Russell 2000, which again was just set. Now, gold did much better on the week, even though it was down today. I mean, at one point it was up, $24, $25. It looked like it was going to make another all-time record high. It was less than $10 away from a new all-time record high. And when it couldn't make a new all-time record high, it sold off. Now, I think that's temporary. I expect gold to hit a new all-time record high next week. We'll see if I'm right again, the way I was last week. But when gold turned around, and even though it was positive on the week, right, gold was up 2% on the week, and it was barely down today. It was only down a few dollars. I mean, it went up 20, down 20, and then it recovered, and it closed just slightly negative. So gold held up very, very well. But the gold stocks got clobbered today. Although earlier this morning, many of the big names that I own personally, that we own in the fund, Newmont Mining, Agnico Eagle Mining, Kinross, a few others, made new 52-week highs this morning, and then they ended up closing negative. I don't think these are significant or key reversals. I think you have a great opportunity to buy this dip in the gold stocks. In fact, given how much the stock market was down, they held up. And in fact, the gold stocks were not down as much as the NASDAQ today. Normally, or it has been recently on these big down days, when the NASDAQ gets killed, a lot of the gold stocks get killed even more. But the GDX was only down 2.2% on the day, and it still finished positive almost 1% on the week. So gold stocks are looking really good. I think they were a great buy today. In fact, I posted that on X that people should take advantage. We still don't have nearly enough bullishness on gold. It really is incredible. I looked at the earnings that came out a couple days ago from Gold Money. I don't really have a position in the company anymore because I got rid of it to buy Schiff Gold back. But I did look at the earnings because they came out with better than expected earnings. Stock was up about 10% from a really beaten down level. And so it popped on these earnings. And I wanted to know, well, why? Why were the earnings good? Because, the gold business, I have Schiff Gold. I mean, it was okay for us. And so I wanted to look at it. And the reason they earned more money than people thought was because so many of their customers dumped their gold. They lost about 2% of the gold they had in custody. About $24 million worth of gold was sold by their customers, even though gold was up 4.5% on the quarter, which isn't bad. That annualizes out to 20%, yet their customers are selling their gold. Now, Gold Money makes a commission when they sell. So since there was a lot of selling, they made more commissions. But I mean, that's not what you really want to see. You want to see buying. Because now you're getting new customers, they're sending more money. You get custody, storage fees. And when a customer buys, then that's a future sell commission that you can get. But when they sell, that doesn't guarantee a future buy because they take their money and they go someplace else. Now, it's possible some of the people that sold gold at Gold Money went and rebought it someplace else if they're just not satisfied with Gold Money. So it's hard to say for sure. But the fact that Gold Money isn't selling a lot of gold, the fact that Schiff Gold isn't selling a lot of gold, the fact that nobody is selling a lot of gold just shows you how ridiculous this is. This is the most unloved gold bull market that I've ever seen. And, the fundamentals have never been better, yet the investors, they've been burned so many times waiting for a gold rally that hasn't happened. Now they're like, okay, it's like the boy who cried wolf. It doesn't matter how good the numbers look. I'm not buying it, right? So it's going to take a huge rally in the price of gold to get people bullish. Now, fortunately, we're going to get a huge rally in the price of gold, and it's coming really soon.